Hello trader friends, how's everybody today? I would like to make this video about market awareness. Market awareness means knowing what's going on in the stock market, and it gives you a very good basis from where you can take and make decisions. The first thing I'd like to do every weekend is see what happened with the main indices. Here we can see that of course we had the first down week we've had in a long time. The Nasdaq was down only 1.5% for the week. The S&P had a rough time, almost 5%, as the same as the Dow. And the index that got really hammered was the Russell. The Russell really got pounded the last week. After we look at the indices, I also like to see how strong and how weak different things are. Here we can see what's going on this year really fast. The strongest instrument this year has been the VIX. As you know, we've had a couple of years where volatility never went above 20, and now it's trading at 36, and on Friday we saw readings over 40, which we haven't seen at least for 6 weeks. And then we also can see that Bitcoin has been very strong, bonds, gold, the Nasdaq, and high yield and high quality bonds. Now the weakest products on the market are oil, the Russell, emerging markets, high yield bonds, the S&P, and surprisingly silver. Right now, the ratio between gold and silver is the cheapest it has ever been. That doesn't mean we can buy silver now, but I mean if you want to buy it, it has never been that cheap in respect to gold. I also like to see what's going on with the sectors inside the S&P, because the S&P sometimes doesn't tell you the whole story. We can see that technology has been super strong. It's up 8% for the year. Then we have consumer staples, which is flat. And the worst performance this year on the S&P 500 are energy, financials, and industrials, not surprisingly. The last 2 weeks of the up move, we saw people rotating out of technology and putting money in the laggards. Those laggards were energy, financials, and industrials. But the last 5 days, that rotation got wiped out, and people, as you can see, went back right into technology that is now seen as a safe haven. People prefer to put money in Apple than in gold. It's amazing what's going on with the FANG stocks. Apple, Google, Microsoft, Facebook, they seem to never ever go down. That's why shorting the Nasdaq is not something that I have an appetite for. Another thing that I like to see is what has happened with the market. As you know, back in February we hit a peak of almost 3,400 on the S&P, and then we crashed super fast to 2,200. Now, the market, after the Fed intervention, has retraced more than 80% of the down move, which is truly amazing. And here I'd like to show you some of the indicators I use to see if we are in a bull market or a bear market. This white line is the 150-day moving average. Many people like to use the 200. I like to use the 150. If we are trading above the 150, to me, we're still in an uptrend. When we are below the 150, that means we're in a downtrend. And then I use faster indicators, which is the green line, which is the 5-day, and the red line, which is the 10-day. This is a great indicator that tells us how to stay with the trend. As many traders, we like to fade every move. And that really has gotten me into trouble during the years by trying to predict market tops or market bottoms. These two lines will help you stay with the trend for as long as possible. As you can see here, we saw the first crossover of the 5 against the 10, but we still were above the white line, so I wasn't panicking. Once we broke down, then that was a message telling you, hey, watch out. Either get out of your longs or start hedging your portfolio. And look at the indicator. It kept us short all the way down, all the way down, and then it crossed over here. So actually, the crossover indicator really helped us stay on the right side of the market. And then look what happened. Since that time, the market has not gone down, and the indicator has not crossed over until this last Friday. I'm not worried very much right now because we're still above the 150. But if we break 2960 on the S&P, that would be to me a caution to start either taking hedges again or shorting the market. Also, I believe that the fair market of the S&P is around 2750 to 2800. So I would be looking to get more aggressive with my purchases if we get to the 50% retracement. Thank you guys. I hope you enjoyed this video. I wish you good luck trading next week. Next week is surely gonna be a wild week. So I hope you guys stay on the right side of the trade, and good luck trading to all.